Good day. It is March 23rd, 2019. Thank you for joining us here on YouTube. We hope you had a great week in the market as we did. And we have a very important message that we want to communicate today. So here we go. What you're looking at on the screen right now is on the left side of the screen, the 1929 market crash that began in October, actually from the August 1929 peak. And that bottomed in late 1929, and then we had a bear market rally, and then we'll show you what followed all of that. And we're comparing that to 2018 top that occurred about the same time of the year as the 29 peak. Here is the crash that occurred over the last couple of months of 2018 into Christmas Eve. That was the closing low on the Dow, and it has been in a bear market rally ever since. And below that is the McClellan Summation Index. Notice that as the Dow moved off of its late 1929 low in a bear market rally, initially that summation index moved sharply higher up to over 800, and then the Dow Jones Industrial Average in that case kept going higher while the summation index was going lower. There was that warning signal that was basically the message we were communicating in our last YouTube video. That was setting us up for some pretty nasty things to follow. Now look at 2018 and 19, same thing. We came down, the market essentially crashed in the last couple of months of 2018 into that December 24th low. Bear market rally, and this time we're using the Standard & Poor's 500, which is the new standard in this decade and century. But notice how as the Standard & Poor's 500 is making new highs, there had come a point where the summation index had already topped and was declining as the Standard & Poor's was making new highs. The big red flag we've been talking about. Friday was that final peak, we believe, in the Standard & Poor's 500. Notice in 1930, on the very first day off of its peak that was set up the same way as we're set up right now, boom, down comes the Dow Jones Industrial Average on the very first day of that decline, about 2%. Very similar to what we saw Friday, the last trading day before this message. Yesterday, as a matter of fact, we saw the same thing. This is a blow up of the first day coming off of the peak that we just saw in the market on March 22nd. It was the first day down, boom. First day down, 1930, off of that peak, boom. Same thing, about a 2% decline. Now, the really important part about all this, we were set up for a top. We've been talking about that. We've been talking about it in several YouTube videos. We've been talking about it every day at 7sentinels.com. But we've been waiting for the key sell signal. Here's the most important part of today's message. We got that signal Friday, when our line of least resistance, 7 Sentinels, goes to a sell signal, which occurs by 7 of our 7 trend indicators all going to downtrend at the same time. We have a sell signal that kicks off the decline. That happened Friday. We'd been waiting patiently for it, and here it is. Here are those 7. First, the BP comp broke right through with the short-term moving average dropping below the long-term moving average. It is on sell mode, downtrend, one element. Then the VIXN, we do the same thing with the moving averages. It broke down through. It is in downtrend. There's two elements. Next, we use the SVXY as a proxy for, it is actually the inverse VIX ETF, and we use that in the same way that we do on Vixen. When it broke through, it gave us a sell signal for that third element. Now we look at the McClellan oscillator on the same basis. We're using the 2-hour 7 sentinels, and both the moving average of the McClellan and the summation index itself are on sell. That's 2 more. That's 5 of the elements. And then finally, the McClellan index for the New York Stock Exchange. That was the last one, by the way, was for NASDAQ. Now for the New York, the McClellan index, boom, on sell. Summation index negative. That's 7 of the 7 elements, all down. That's a sell signal, line of least resistance sell signal. This is the most important sell signal, folks, that we're going to see this entire year. This is a big one. This is important. Let me show you why. Here is, again, 1930. And here is the bear market rally from November up until April of November of 29 up to April of 30. Here is that sell signal where we had just what we happened on Friday occurred. Boom, first day down 2%, started the decline with this after the setup that we described above. So there's the first day of it. Now let's take a look at the whole year 1930. Now look back on that April sell signal that we just described and look what followed that for the whole rest of 1930. The Dow Jones Industrial Average dropped down to below 160. That was a drop of some 65% from its peak back in 1929, and that's just the first year. That's what we call year one. That's what followed that sell signal. It's the same thing that we just saw yesterday on the Dow Jones, on the Standard & Poor's 500, on the New York Stock Exchange. The full bear market of 1929 to 1932, here we see that the Dow Jones Industrial Average dropped all the way down from 380 to about 41, a loss of nearly 90% over the course of those 3 years or so of that bear market. And here, again, was a sell signal that is equivalent to what we just saw on Friday. Now, we're not saying the market's going to drop 90%, but we are saying that the same setup is in play. The same general move will occur. Maybe the magnitude is going to be 40%, maybe 50%, maybe 60%. Maybe it will be as big as the 29 crash. But the important thing is we have one heck of a bear market, probably the biggest one we've seen in our lifetimes, underway right now. Leg 2 just started. This is the best shorting opportunity for the year 2019, and we wanted to bring that to everybody's attention. This is, in our opinion, the most significant trading opportunity of this decade, probably the most significant trading opportunity of this 21st century so far, and even further back. Think in terms of what you can do with a market like this that we're in now, in terms of the leverage that's available in today's markets with futures, with ETFs, with options. We have been preparing for this day for the last 10 years, and we're here, full stop. So that's a message we wanted to bring to you today. It's an important one. Serious traders should be very much aware of what's going on. If you go to 7sentinels.com, by the way, there's a lot of articles there that you can read for free articles like Meet the New Boss, Same as the Old Boss, talks about how we are getting a repeat of 1929, of 2007, of past cycles. Nothing happens in the market that hasn't happened before and won't happen again. Another article, When Worlds Collide, it talks about the bull market of 2009 to 2017 hitting square into the bear market that has begun from 2018 for years ahead. Another, Red Sky in the Morning, it talks about the warning signs in 2017 and 18 that were the most magnificent warning signs of our lifetimes and will stand out as a quintessential example of a market top. Rainmaker, there's a number of articles there free for your reading. If you go to this link right here, it says limited time trial. Click on that if you wish, and for $9.95 you can have a 17-day trial of everything we do at sevensentinels.com. We trade through we update the website through the day, update our indicators all day long during each session. We do market analyses at night on weekends. All of our trades are posted in real time as we do them. All of our signals are alerted in real time as they occur. It's all there. For $9.95 you can have a 17-day trial and just see what we're all about. So we want to thank you again for coming by, and by all means we wish you good trading.